going on? It's been a while since I did a video, a trade review. And yeah, I said I wasn't gonna be giving out more free tips and all, but I got a couple of messages and at least people were listening. So I think I'll continue for some time. It might not just be as frequent as I used to share. Just because I have a couple of things I'm handling right now, which is not letting me do this as much as I would want to. Um, I'm moving to a new city and like I've been sick for some time now, so literally just been trying to rest and recuperate. So I've been taking some time off the charts, and so I want to give a trade review on the trade I took in Eurusd this week. This week wasn't really my best week. Last week was a banger though, but this week, I took a loss on Monday. I took a loss on Tuesday. Took about three losses on Tuesday, and then I pulled off a winner on Wednesday, so just up 6R for the week. Haven't traded much this week. Um, but yeah, I'll go over it. The main context of this video is going to show you the importance of price correlation. And once you understand how price is correlated and when price is going to move and when the other one is not, it's not, I wouldn't say it's not going to move. It's more like if you're trading the major pairs, which is basically Euro USD, GBP USD, in as much as they move together from like they're like sister pairs, right? They move together more times. There will be times where one is more favorable than the other one. What I'm just saying is there will be a time where trading one out of both of them would do more good to your equity than trading both of them or trading the other one, which is basically the less favorable pair. So this has to do with understanding the DXY, Euro GBP, Euro USD, and GBP USD. Now, first off, I'll start with Dixie. Now, looking at the Dixie, I posted a chart on Twitter and equally on my Instagram where I had this level as my last liquidity pool, which was a 92.15. So I had 92.15 as my last liquidity pool for price. Now, why did I have this as my last liquidity pool? This is an area where I was expecting displacement of orders, which was equal to the NFP low. And at the same time, on the flip side, I was having Euro USD NFP highs as my last level, which is 1.1995. It's off by a bit, but 1.1995. That's the level I had for my last when I took a trade last week Friday. This was my TP level, though I didn't hold it till coming Monday. I TP'd earlier than this, but on Monday we ran up to that level. So I had this level as a displacement order. So once price took out this level, and then on Tuesday you can see we dropped back into a bullish OB and then rallied higher, right? On Wednesday, I was expecting price to take out Tuesday's high. So I wanted to see price take out Tuesday's high. And at the same time, Euro GBP had a level to cover. This picture is equally on my Instagram and equally on my Twitter account, where I was using the weekly open and a bearish order block to know where price is going to go to. So this was the weekly open for this week. This is basically Sunday's open. You can decide to use Sunday's open, or you can decide to use Monday midnight. That's all up to you. I just did my research, and Sunday open is fine for me. Like Sunday open gives me the results I want. So you can decide to use Sunday's open. You can decide to use the midnight of Monday, which is basically 12 a.m. Monday. So that's all up to you. But for me, I use the Sunday open. So for the Sunday open, this was my weekly open, and then the weekly open lined up with a bearish order block. So I had this level marked out, and what I was expecting was for price to run up into the bearish order blocks as the weekly opening uses a resistance level, and then run down, taking out the swing low, filling up this void, and eventually running to 0.8720 level. So here was a rough double bottom, and I was expecting price to finally come to 0.8720 level. So now having a bearish Euro GBP in mind, having a bullish Dixie in mind. Now, what does that tell you? If the Dixie is bullish, and Euro GBP is bearish, that more times on Euro GBP's part, that's suggesting that the euro is weak and the GBP USD, and the pound is strong. So if the pound is strong and then the euro is weak and then the dollar is strong, that means it's more favorable for Euro USD to go to the downside since the euro is weak and then the pound is strong and then the dollar is strong. But on GBP USD, GBP is strong and the dollar is strong. It's gonna be like what's the word I'm looking for? A contraction, because it's like a tug of war. The pound is strong and then the dollar is strong. The pound wants to push higher, the dollar wants to make pound come lower. It's going to be like a contraction happening with price, and that's what we had on Wednesday. You can see on Wednesday, nothing much happened here. This was Wednesday's price action. So I didn't touch the GBP USD on Wednesday. I had my focus on Euro USD. Now, looking at Euro USD on Wednesday, what was I looking for? I was looking for price to run up to the bearish order block, right? I wanted to see price come up to the bearish order block, and then I would look for a lower time frame fractal pattern to go short on this pair. Basically looking for the next big figure level, which what I was actually looking for was a 1.1780 level. I wasn't going for 1.185, 1.175. I was going for 1.178, but I got like 9 pips before that level. So this was the level I was looking to TP. As I said, I would always walk around 20s, 50s, zeros, and 80 levels. So this is the level I was looking to close my trade for the day, and it lined up with the daily range of what I expected Euro USD to do, which is about, I was expecting about a 50 pip to an 80 pip move on Euro USD. So when we ran up to this price level, when the market opened during the London session, all what I did was go down to my lower time frame, which is the 5 minutes. So as soon as we tapped into the hourly block here, so as soon as we tapped into the hourly order block here, all I waited for was the price to break down below, and then I'll go short from the mitigation block. So when we went below the mitigation block and price was tested this level, I went short there. Now this is the only position I had on because, as I said, I'm not feeling too up. So as soon as I opened this position, then I got this breaking structure down where price ran this area of vague double bottom, or call it triple bottom, where price ran this level. I moved my stops to break even, and I just watched this little movement. Then I went to bed, and I just set my TP, and price came, ran my TP, and that was it. But if you were active on the charts, now this is how you can take advantage of intraday price action. Um, on GBPs, as I said, it was not important to see. And now, how did I discern that GBPs wasn't worth my equity on that day? It's about understanding what happens with Euro GBP and what happens with the Dixie. So, looking at fiber, when this move happened and then you get this big spike down, at every break in structure, price return back to a bearish order block, and this is how you would have compounded your way down. It might sound a bit silly, but this is like when you take advantage of days like this is how you get the stupid percentage growth on your account. And you don't even need to over leverage on this. You do not need to have a 5% risk. That's why I when people say the risk that much in your account, it sounds a bit funny to me, because if you actually understand how to get about with price, you wouldn't need to risk so much on your account to make that much. So at every time we broke a structure, at every time we broke a structure, we came back to a bearish order block. At every breaking structure, it was sort of like, I don't know if I should call it a rinse and repeat. Every time we took out a structure low, price would come back down to basically the point of origin, which is the last block, the last pivotal block that sends price coming down. And going for your last TP level, let's say you want an extended targets probably here, then this would have been, obviously you've been out here, but you just wanted to take the last trade. This would have been it before we finally broke structure to the upside, which was this. When we finally broke structure, to the upside, this would probably be where you would have had to collapse all these positions, whereby you've had one here, one here, one here, one here, one here, 5 positions intraday, 5 positions intraday, and as soon as we take out the structure high, that's where you collapse it, because as soon as you take out the structure high, prices this candle as a breaker to push for higher prices, as you can see, though we came back to that level. But this is just an example of understanding price correlation. And Euro GBP, my pattern played out, posted it on my Twitter, posted it on my Instagram account, where I expected to rally into the weekly breaker, also weekly open and hourly block, and then came for this lows. I'm sorry if my voice doesn't sound, what's the word to say? If I don't sound enthusiastic about what I'm talking about, I just had to get this video out of the way because I'm traveling tomorrow, and then next week that's when I'll move. So I knew that if I don't do it today, I probably wouldn't just do it again. Um, yeah, so basically that's just it about price correlation. If you have any questions, get at me on my Instagram. Um, get at me on Twitter if that's the platform you use. My name is the same on all social media accounts. Yasuke on charts, YASUKEONCHARTS. It is spelled Yasuke, but it's actually pronounced Yasuke. So get at me on Yasuke on charts, Instagram and Twitter. So hope you guys had a nice trading week and you haven't done your arse in the markets. Um, yeah, I hope you guys having a good week. So that's just it, guys.